Hey, what is up guys? It's Chris with Crypto Profit. Today's video we're going to be talking about mindset, and I'm going to set the expectations for the next videos and just trading in general. Alright, so the first thing that we're going to talk about is going to be you need to have a plan for the market going in either direction, and you need to be neutral. You can't let your emotions dictate what you think the market is going to do. I don't want you guys to have an opinion. Alright, the way you trade is you have a plan for both us going in the upside and us going in the downside. Failure to plan is planning to fail. And when you place a trade, you need to have a plan for when you're going to go in, when you're going to pull out if the market goes in the opposite direction, and when you're going to pull out if the market goes in the direction you want it to go and get your profits, okay? If you don't have a plan for the market going in both directions or have a plan on when to go in and when to pull out, what you're doing is gambling, not trading. And we're not here to gamble, we're here to make money. So, we're in this channel right now, we know we're capitulating, okay? I don't place trades based because I think that people are saying we're going up or we're going down. I say, all right, in order for us to go in this channel, I'm going to have to see confirmation. That's higher highs, us breaking the support and resistance lines, us making the shapes, and what are that moving averages telling us? Okay, and then if we're going down, it's the exact same thing. And only once I start seeing all the confirmations, I place a trade. I don't try to predict the market or what it's doing. I let the market do its thing and then just go with the flow. Also, another thing that you guys need to keep in mind is that if you think the market is going to go up or you think the market is going to go down, it's a good idea to look at people that think the opposite so that you know what they're thinking and why they're thinking that. I like to say the story about Dan Lok, and he's a seminar speaker for those of you who don't know. And he goes to the seminar and he buys everyone's courses. He's the main speaker and he makes more money than everyone else. And one of the guys goes up to him and asks him, Dan, why do you buy everyone's courses if you probably know more than they do and you make more money? And he said, well, that's exactly why I make more money than everyone else, because I buy everyone's course. You don't know what idea is going to come from what something says and become $1 million idea. So you need to do the same thing with trading. You know, just because you think that the market is going to go down, maybe you listen to someone that thinks the opposite and it might persuade you to pull out of a trade, or it might give you confirmation to stay in a trade. You need to stay neutral and you need to have an open mind and look at everything. Also, you guys need to understand that 99% of trading is just going to be mastery of the basics and mindset. I like to use the example of driving. Once you know how to drive, you can drive any vehicle. It might be a little bit weird to get from your vehicle to another, but once you get used to the quirks, it's basically the same thing, and it's the exact same thing with trading. Once you know how to master the basics, it doesn't matter what kind of market you're trading in. The basics are the basics regardless. And to show you guys what I am talking about, I'm going to show you guys a perfect example. We're going to go over to the weekly, all right? And we're going to go ahead and set up our 3 moving averages. And now we're going to go into the S&P 500. And notice that in the S&P 500, what happened? We know that moving averages act as support and resistance. We touched this 200-day moving average, bounced up, and touched the 100-day moving average, right? Doesn't matter whether I'm looking at stocks, or I'm looking at Forex, or I'm looking at crypto, or I'm looking at Litecoin. The basics are the basics regardless of the market. Also, one thing that I've noticed that a lot of novice traders make mistakes is that it doesn't matter what kind of trader you are, whether you're a short-term trader or a long-term trader or an intermediate trader. You're going to be looking at all the charts. A lot of people make the mistake that, hey, if I'm, let's say, a scalper, that means that I do short-term trades. I'm only going to be looking at the 15-minute and the 1-hour chart. No, you need to be looking at all the charts. You'll place your trades in the 1 hour and the 15-minute, but that doesn't mean that you're going to be ignoring all the other time frames. Failure to plan is planning to fail. You need to know what's happening both in the long term and the short term, and it doesn't matter what kind of trader you are. What dictates what kind of trader you are, whether you're a long-term trader or a short-term trader, is your patience and your capital. If you can't afford to keep a trade in for 6 months, then you're probably going to be a short-term trader. If you don't have the patience to leave a trade in there for 6 months, then you're going to be doing something a little bit shorter term. That's what actually dictates what kind of trader you're going to be, not the time frames. You need to be looking at the picture as a whole. And as we start progressing, we start making videos, I'm going to start showing you guys the intermarket correlations between stock markets and what's going on with mining. So don't worry about that. We're going to get to that in a later lesson. I just want to start setting the ground rules and the expectations for the things to come. So also, I want you guys to realize that it doesn't matter if you place a trade and you lose. You need to pay for education, right? If you go to school, you need to pay for your education. So when you're trading in the markets and the market doesn't go where you wanted it to go, look at it as paying for education. Look at it as a down payment for success. Another thing that I wanted to talk about when it comes to trading is that, if you lose, it's okay, it's fine. The only way you're going to get good at trading is repetition, repetition, repetition. Okay? If you can't bring yourself to trade and practice, you're never going to get good. You need to practice, 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 practice. The more you do it, the better you become, the more profitable trader you do. This is why I love crypto, because you can practice in real life markets and get a lot of hands-on experience and not blow your account compared to other forms of investment. With GDAX, you're not leveraging. So let's say, I'm just going to use an example. You have $100 and you place a trade right now, and Bitcoin goes from 3,000 down to 1,500. You lost $50. Where in other forms of investments, you would have lost a lot more. You could have blown your account. So, but if it went up from 3,000 to 6,000, you made a couple $100, right? You made $200. So you get a lot of hands-on experience. So right now, just practice with a small account, get a good understanding of the basics, and start mastering it. Once you guys get good at mastering the basics, put in a little bit more money, but only put money that you're willing to lose or that you're okay with, leaving in there for a while as practice. You want to do it over and over again and not get discouraged. That's what's going to make you a profitable trader. That's what's going to make you a winning trader. It doesn't happen overnight. Practice, practice, practice is what's going to get you better. So that's enough for today. Thank you for watching. Remember to trade responsibly, and as always, have a great day.